Net Wealth Investments Limited is licensed to provide general advice. Our podcasts are not tailored to any one financial situation and may contain views of our presenters which may not align with Net Wealth's. The guests' organisation and Net Wealth have an arrangement for their financial products to be available for investment through the Net Wealth platforms, and Net Wealth may receive fees from the guest. More information about Net Wealth can be found on our website, including our financial services guide and disclosure documents. Please seek professional advice before acting.
Hi, I'm Matt Heiner, Joint Managing Director of Net Wealth, and welcome to Between Meetings. In this podcast series, I chat to industry professionals and thought leaders on what made their career successful and the opportunities and challenges they see on a wide range of topics as they relate to the delivery of advice and financial services. I hope you enjoy their unique insights. In this episode, Kristine Brooks, Head of Australian Business at Milford, shares what drew her into wealth management and how she thrived in a male-dominated industry. Kristine talks through the leadership role she has played in supporting women and diversity, valuable lessons learned during her career, and what she means by a short pencil is better than a long memory. She also discusses her achievements and challenges of mergers and acquisitions, such as bringing competitive cultures together and the importance of being a people-focused leader. And finally, we delve into Milford's groundbreaking new white paper, which illustrates the value of tapping into people's emotional relationships with money, as well as what's next for Milford and Kristine's great passion for cooking in her spare time. As always, I hope you enjoy the episode, and if you do, please make sure to share and subscribe or to get in touch with me on LinkedIn. Welcome to the show. Great to have you here.
It's great to be here and lovely to see you in person after so long.
It has been a long time. I was actually trying to work out how long we've known each other for.
I was just talking to Sarah about this and I think it would be nearly 20 years.
Is it really?
That just makes us both feel really old.
Particularly when you look at what's happened. It's been a lot but a little.
Yes, very, very true. Yeah. I think we still look very youthful though.
Absolutely. Probably not a bad place to start. For those of you that don't know Kristine, do you want to give us a bit of background on sort of what you've done over your life? Because it's pretty fascinating when you think about the different roles you've had.
Yeah, well, it feels like a long time in financial services, but I guess from the start, I started in a stockbroking firm when I was about 18 in Perth, and that was a really amazing introduction to the world of financial services in Australia, and seeing trading, every day. I worked there for the tab float, things like that. Was really, really exciting times, and moved into more of an advice business with Deutsche Financial Planning that became Godfrey Pembroke. And that was wonderful, just seeing the impact of advice on individuals. I think I'd kind of found my true calling there, seeing the impact, directly on people's personal wealth. I really enjoyed that. And then I went to work for Challenger as a BDM. That was the time when kind of Chris Cuff came into the business. It was changing from when Bill Ireland, it was very much an annuity style business, moving into asset management. So it was a really good grounding to learn more about asset management. And then I moved to Sydney and started with Zurich, and I had a really long career with Zurich. So I was there for 16 years, but had many, many roles, and it was a wonderful, wonderful experience. And now I'm at Milford. So I joined Milford in 2020 as the head of Australia. And yeah, again, just an amazing business to be part of. And, it's a new name in Australia and a real kind of startup vibe, but I'm loving it.
Now, you've rattled through that pretty quickly. I've got lots and lots of questions about many of those roles. But thinking back through some of the other podcasts I've done, you're not the first guest that actually started off stockbroking in Perth. I think Paul Heath certainly cut his teeth many years ago stockbroking back in Perth. But the question I had was, how did you get into stockbroking? Because you were actually brought up in a small town about an hour of Perth. Your old man was a diver, I believe.
Yeah, that's right. Well, it was a really small town when I grew up there. It was a town that was predominantly owned by Alan Bond. It was, pretty mad in that it had a dolphin kind of theme park, which we frequented often, a national park with heaps and heaps of koalas. It was a bit of a home and away kind of style little town. And whilst I loved every minute of growing up there, I very much had my eyes on the city, I think, and I started an accounting degree and hated it. So I kind of went into retail and got pretty bored of that pretty quickly. And so I went to do a business kind of degree, and the lady that ran the business college, she said, look, you know, you're wasting your time. We've got opportunities for you. I want you to go on a couple of interviews. And she said, I don't think you'll get this one, but I want you to start, you know, putting on a suit and getting ready to go for an interview. And I went to the interview at Sir James Capel, and it was you know, in a high rise. I don't think I'd ever been in a building that kind of high up. And the director, Mr. Smith, he was about 7 foot tall, so the intimidation was pretty high at the time. And I don't know kind of what I did to impress them on the day, but I got the job, and it was actually as a paraplanner within the financial planning team within the stockbroking firm. And then it just became a bit of a jack of all trades. I, you know, got exposure to marketing and running their cash management trust and all kinds of things. But I think, you know, Perth at the time, it was the highest number of stockbrokers per head per capita in the country. You know, there's, you know, kind of the wild frontier over there at times. And, yeah, it was just amazing. It was a really good kick-off to the career.
As you say, the wild frontier, it would have also been an incredibly male-dominated industry back then. How did you find moving into a completely new industry with its own jargon, high pressure and male-orientated?
Yeah, I think that probably comes from Dad a little bit. He, you know, I think was quite disappointed that I wasn't a boy when I was born. That was kind of a story that was replayed because he wanted me to be a diver and follow in his footsteps. He was really, really successful in his field of work. And, you know, he just drummed into me my whole life not to let being a girl stop me from doing anything. So to be honest, I never really thought of it. I don't think anyone ever stood in my way being a female in the industry. Yes, 100% it was incredibly male dominated, but I think, you know, I was lucky in that I had a lot of males that sponsored me and really wanted me to be successful, and especially the advisors that I worked for initially in the stockbroking firm. Both of them had daughters, and I think they were really invested. They wanted me to study, and, you know, I did my diploma of financial planning with them. They really helped me through that. And yeah, I think that's kind of been repeated through my career. You have to work hard, and I think there are definitely challenges, you know, growing up as a female in this industry. And I think it's maturing, but, you know, you also need to be open to be supported and helped and guided and sponsored, because that's certainly been the case for me.
Yeah, and throughout your career you've held some very senior leadership positions. What have you done as a result of that in your role to promote women and equal rights?
Yeah, definitely. I think, you know, I'm an avid mentor and sponsor. I think at Zurich we had a really, you know, amazing, talented female demographic of people coming through the organisation, and I took personal responsibility for sponsoring them. You know, I was really invested in the LGBTIQ community at Zurich, and, you know, definitely moving into Milford. And I think it's become much broader than just female sponsorship. It's been, you know, a real calling to me around diversity in all forms, you know, whether that be age, whether that be background, whether that be male, female, but just making sure that, you know, talent is recognised and supported, and that everyone is free to be themselves when they come to work every day, and they feel safe, and that they'll have the opportunity to be successful, you know, as anyone within the business.
And I think that's certainly been seen, certainly since I've known you, and the people and the teams that you built around you have been incredibly diverse and incredibly high performing.
Yeah, I mean, we even brought, you know, a couple of mature age, you know, people that had retired in the industry back, you know, just to get guidance and to understand their experiences. So it's not always just young people coming through it. You know, there's a lot we can learn from people that have done it before too.
Whilst we're on leadership, you've had a number of, you know, very senior, high-profile bosses in your time. What are some of the great lessons that you've learnt throughout the various roles that you've held?
Yeah, I think, you know, never ask anyone to do something that you're not willing to do yourself. I think that's a really big one for me, and where I've really respected the leaders that I've worked for. You know, they're not just kind of a front man or a front woman of the business. They're someone that's really willing to roll up their sleeves and grow a business. But, you know, what I think really resonates for me is when leaders are very people focused, and they, not only want the best out of their people, but they give their best to their people, and they make sure that it's a great environment to work within. I think that's really, really important.
Reading through some notes prior to this podcast, I saw you put a quote in there, which I then ran past a few people around me because I hadn't heard it before and was trying to understand what it meant. What does "it's better to have a short pencil than a long memory" mean?
Well, I have lots of ideas, and I think that I can remember everything that I've said to everyone. And generally I'm not too bad, but I did have an instance where I was a little bit challenged and I'd forgotten something because I hadn't written it down. And the person that I was dealing with at the time said, "Chris, sometimes a short pencil is much better than a long memory." So just writing things down was a good lesson to me.
I love it. It makes a lot more sense now. And through that time, you've also been involved in some pretty incredible projects through some large M&A activity. Love to hear your thoughts on that experience, particularly at Zurich, maybe the good times and the not so good times.
Yeah, I think the M&A opportunities that we had at Zurich were, the biggest achievements of my career, but also the biggest challenges. We acquired 2 insurance businesses in Australia, so the Macquarie Life business, which was a really successful business in its own right, and then the OnePath business from ANZ, which was actually a larger business than the Zurich business. So that was challenging just from that. It was kind of, we were growing, but they were still very much a Goliath, in the industry. I think being part of a deal team is an incredible experience that I would recommend to anyone. The excitement, what you learn from performing due diligence, what you learn from building a business case to get funding and support to win the deal is, it's really different work to what we might perform in day to day. It's incredibly exciting. I'm a really competitive person. I think I'm really emotionally intelligent. So, being able to pick up cues around how the potential, seller is engaged on the deal, whether you're going to be successful as the purchaser, because it was a competitive process in both of those deals. But it's around the clock. So the Macquarie deal was a little bit smaller, so more manageable, I think. OnePath was around the clock weekends, and we were dealing, our bankers were both in Australia and overseas. We had the deal team running 24/7 between Switzerland and Australia. So you'd go to bed late after meetings, and then you'd wake up and your inbox would be full, and people had been crunching numbers all night that you had to digest pretty quickly to move into management meetings and be negotiating across the table from really experienced deal teams and bankers. So just incredible in terms of what you learn, the skills that you acquire. I think it's a little bit careful what you wish for, though, because, you win the deal and you go, everyone celebrates and isn't that fantastic and look what we've done, and you give yourself a big pat on the back. But, then to the shareholder, you have to make sure that the rationale for the deal is realised. There's obviously, a large amount of money that's being spent. So what does that return in terms of, growth of your business? And then when you're putting these deals together, you assume a lot of synergies and, cost, efficiency that you're going to be able to bring to the business, or, whether it's technical capability, technology platforms, those kinds of things. So then when you've, won the deal, you've actually got to come back and make it work. And unfortunately, when you're putting really large businesses together, there's challenges from a cultural perspective, but generally the biggest component that's impacted is your people. So whether it's the people on the existing side of the business or on the business that you've acquired, and I think making, really big structural decisions that impact, really great people and their careers, for me that was the most challenging aspect. And I think, you really need to be, quick in your decision making. You need to have good rationale for those decisions, and if changes are required, you need to make them quickly, because I think people sitting around waiting to know if they're going to have a job or not, is really disruptive and it's really unfair. And just treating everyone with dignity and transparency through that process. But the thing that I learned is if you invest in people, and whether they're going to work for you forever or to move on and work for another organisation, if you've done your very best by them in the period that they work with you or for you, that they'll remember that, and that you can kind of both move on and still have really strong relationships whether you work together or not.
Before we bring you the second part of this chat, a little bit about who we are. Celebrating over 20 years, NetWealth is an ASX-listed company that has been rated number 1 for overall user satisfaction by Investment Trends for 8 consecutive years in their Planner Technology Report. As the financial advice landscape changes, it's important to embrace new technology to enhance the way you run your business. With change comes your chance to innovate, explore new perspectives, and realise new efficiencies. NetWealth is here to support you on this journey by providing you market-leading technology, excellent customer support, and expertise to help your business thrive. Contact us today or visit the NetWealth website to learn more and get the PDS, which should be read before making a decision to purchase a NetWealth product. Products issued by NetWealth Investments Limited.
I think that's great advice. And when you look at the industry, particularly post-Royal Commission, and your point was an interesting one, that you actually took over a company that was much bigger than you. If you look around the industry, that's happened multiple times. As the banks exited wealth, they were quickly selling off large insurance companies, large distribution companies, and you've seen these many scenarios actually where the smaller player has ended up buying the bigger player. And we're seeing that in advice as well now. So there's obviously a huge amount of merger and acquisition activity across the advice industry, with small firms bulking up, big firms bulking up. How do you actually go from a cultural perspective? I understand the people perspective, and there was some great advice in there, but where you've had fundamentally two competitors that have hated each other respectfully for many years and been out in the field selling against each other, how do you bring those two cultures together?
Yeah, Macquarie was interesting. I think if you had it on paper, described the original Zurich culture and, a much more, harder edge Macquarie culture, you might have kind of had the perception that that's not going to work. And, we definitely at the time had people within the Macquarie business really proud of, that brand, and they liked being a Macquarie person, and they didn't necessarily want to be a Zurich person. So, we really had to go in and spend a lot of time with that team and understand what was important to them about the Macquarie culture and educate them on what we believe the Zurich culture was. And at that time, it was a very, the word that was most consistently used at Zurich was family. It was very much a family culture, and people really wanted to hold on to that as well. They didn't want, this new group of people kind of coming in and disrupting that. So it wasn't just the new people that we were catering from a cultural perspective or cultural change perspective, but the existing cohort. And sometimes in a deal, you focus on the people that you're obtaining as part of that transaction, and you forget about the people that have built the business that, is in a position strong enough to acquire another business. So, they need to feel valued and heard as well. And your culture changes with every additional person that walks in the door. It's not kind of something that ever stays still, and it has to continue to evolve to encompass where you want to move to. So we did a lot of work understanding from the cohorts of teams around what was important to them. And I think, there was wins and misses in that process, but, broadly, I think we gave both sets of teams the chance to influence that culture themselves, because culture's not just what the leaders say it is, it's what we all do. And I think we were successful there. The OnePath cultural kind of coming together, I think, was a little bit different, because what we found was there was a heap of OnePath people that had already come to Zurich and a lot of Zurich people that had gone to OnePath. So we had kind of I guess a bit of a reunion, and there was more likeness around those two cultures. The OnePath business was very much, I guess contained within the ANZ business. So it was less of a banking culture and more of a, true insurance business. And they really were excited to go to a dedicated insurer again, and move out of a bank kind of institutions, because they wanted a business that understood insurance and kind of lived and breathed that every day. So that one was a little bit easier, to be honest.
You're getting the band back together.
Yeah, that's right.
Given, I guess, also the focus on advice on this podcast, do you have a view on whether putting two smaller businesses together is easier or harder than putting two really big businesses together from a cultural perspective? And also, what advice would you have for those thinking about maybe looking into an acquisition strategy to grow their own firm?
Look, I would assume that two smaller businesses would be easier because you can wrap yourself around the population of the business a little bit more readily. Really big populations of people, it's hard to, get that level of transparency around what everyone's thinking and feeling. And, they were big businesses. With kind of one challenge to that thought, I guess, is if you've got, two principals that are coming together that have got very, very strong, thought on what they want their business to be, or, what they see the future of the business, or if they're just really strong individuals within those businesses. If they don't form a very strong, cohesive relationship or don't agree on, direction or culture, I think you'd be challenged, and, that you'd probably feel that more because it's a smaller business. So I think you need to make sure that those alliances and those mutual, that mutual respect for each other's thoughts or directions would need to be there as a foundation. Otherwise, it'd be pretty hard.
Fantastic. Now, one of the constants throughout your career has obviously been advice, whether that's service in the advice community from an insurance perspective, investment perspective, or, as you said, being a paraplanner and an advisor. In your new role as Milford, love to hear what you're doing there. It's obviously a new fund manager in the country, but it's also got, as expected, a real focus on advice and improving the quality of advice.
Yeah, so Milford was an asset management firm that was started in New Zealand. People might not have a good understanding of the scale of the business in New Zealand, but we're one of the largest non-bank owned asset managers in New Zealand. We're running just shy of 17 billion funds under management now. So it's pretty strong business. The business in New Zealand was or is still very focused on direct investors, very different market over there. But what I really love about that culturally is that we're very used to sitting across from clients and talking to them about their investments and our performance. Whereas I think in Australia, because of, the intermediated distribution through advisors, sometimes asset managers get quite removed from that conversation and potentially a little bit protected. So we're very used to having that conversation. I think that makes us a lot more accountable. The business in New Zealand also has a really strong private wealth kind of firm as part of the broader business, and that's really because of the evolution of the direct business. We had clients that were seeking advice, and we needed to establish that proposition. So we're a very advice-focused, advice-centric asset manager, which is a little bit different, I think, also in terms of when we look to start the business in Australia. And I guess, we are a new name here, but I've been overwhelmed with how many people have wanted to hear about a new name. I think it's probably been a little while since there's been a new asset manager. And whilst we are new, we are established, so we kind of bring that initial credibility to the market, which is wonderful. We've very much decided to focus on the advisor market in Australia. I think, from an asset management, kind of perspective, what you want to know is that you're bringing solutions that can help advisors in constructing portfolios for clients. And, when we're building our business, we want to make sure that we're building a sustainable, robust business. And having an advisor involved as part of that process, I think builds a lot of strength, to us, because we know when people might be challenged from a market volatility perspective, they've got an advisor there, settling them, articulating what funds are meant to do and educating them. So that's good for us.
Absolutely. And you've recently done some research with the XY community. What were some of the findings from that report that you did?
Yeah, so I guess, really bringing the brand to the market, we wanted to make sure that advisors knew that we were committed to them and that we wanted to support them. So we looked at a couple of thought leadership pieces around, what were their biggest challenges at the moment. The XY community are really good at tapping into their, conversations and understanding what is being thrown up. And what we were finding was that there was a strong conversation around the influence of behavioural finance on decision making by clients. And if advisors could just tap into people's emotional relationships and money, they might be able to influence them better from a decision-making perspective. And I guess, that's a big shift from technical advice and where the industry's been born from. So this white paper is all around behavioural finance and really talking to advisors around establishing skills on coaching and coaching clients around their emotional relationships with money and, why we do the things we do. I think the great thing that I've loved about the paper and engaging advisors on it is that, if people can understand their emotional relationship with money, they've got a much better chance of achieving not only financial success but well-being, and, just how financial well-being, can really help people have much happier lives.
Given the renewed focus of an advisor and the new skills that they're having to learn and the way that they're servicing their clients, many are now looking at outsourcing the investment piece to asset consultants, managed accounts. So in some ways that almost detaches you from the relationship. Who do you see as your real client these days?
Yeah, it's been, I guess, that big evolution of fragmentation out of the big institutions and, a big theme of self-licensed advisory firms, being established. And I think that's great. I think it's wonderful that people are more in control of how they want to run their businesses and decision-making. It's been really interesting, starting the business at this point in time and that rise of the asset consultant and how firms are making their investment decisions. So I guess we're seeing all kinds of trends. We're seeing people, firms outsourcing completely to the consultants around how they build their portfolios. We're seeing the consultants perform an advisory service and the advisors, within the business still wanting to have a really strong voice in kind of where the portfolios are being invested. And then we've still got businesses that, they see that as their area of expertise and they want to, have full control, but they still might need some kind of compliance support. So, really honestly, they're all our target market, but it's just how we engage and influence, our input into those relationships. We might go through different channels. We are finding advice firms that have a very investment-centric proposition that are very much positioning themselves as investment professionals. Our proposition does seem to be resonating with them more.
Chance for a quick plug. What are the current strategies that you have in Australia and what's next?
Oh, that's very generous. Thank you. So our flagship fund is the Absolute Growth Fund. So that's a core defensive Aussie equity strategy. It's actually done very, very well through this recent kind of period of volatility, so definitely one to have a look at. And then our Dynamic Small Companies Fund, again, is a great proposition. So those two are highly rated by Lonsec and Zenith, and they're available very much on the Net Wealth platform, but just more broadly across the market. And then we've got a Diversified Income Fund that's maturing along the ratings process. And we've just launched 3 global funds, so Global Real Assets, Global Opportunities and Global Growth. So they're new to market, but, Yeah, we've been overwhelmed by interest. I think people are really kind of reassessing what they're doing in global equities at the moment. And then we're going to list 3 of the strategies over the next couple of months. So, just huge demand for listed vehicles from what we're seeing.
That's a long list, which begs the question, what do you do with all your spare time?
Protect it. No. I've got 2 boys that are very busy, so I find that they're the core focus. I love to cook and eat, unfortunately. I wish I was one of those people that wasn't mad about food, but I wake up and think about what I'm having for dinner, so that consumes me. And then, I love the beach and the footy. They're probably winter and summer focuses, but hopefully a little bit of travel in the next not too distant future.
Have you got anything planned yet?
No, not really. My partner works in the AFL, so we're a little bit stuck here for winter, but hopefully something at the end of the season.
Yeah, or somewhere overseas in January.
Yes, please.
Yes, please. Great to catch up as always. Thanks so much for your insights. We've covered a lot of ground as we tend to do, but it's been fascinating for me to hear a lot of those stories for the first time, so thank you very much.
And thanks for having me.
Thanks for listening to this episode of Between Meetings. For more episodes and to subscribe to our series, visit the NetWealth website, iTunes, Spotify, or your favourite listening service. And if you want to contact me or engage or discuss any of the topics raised, please find me on LinkedIn or Twitter or send me a private message. We hope you can tune into the next episode.